Hello everyone, this is Phil Yeager and welcome back to Test Your Knowledge. And the second question I picked is a corporation question. The topic which I will tell you is Schedule M1. Now Schedule M1 is a reconciliation on your C corporation return which reconciles book income to taxable income before the dividend received deduction. All right, so we want to reconcile book income to taxable income before the dividend received deduction. Now, let's read the question here. Gray has taxable income of $100,000 before any capital gains for 2012. Here is a history of the corporate capital gain transactions. In 2007, they have a capital gain of 10. 2008, capital gain of 3. 2009, 0. In 2010, they have an $8,000 capital gain. In 2011, a $40,000 capital loss. And 2012, once again, a capital gain of $20,000. Now, they want to know, what is Gray's 2012 taxable income, which includes the capital gain transactions and the Schedule M1 adjustment? Now, the Schedule M1 adjustment is basically this, all right? It is the adjustment that appears on the Schedule M1 to reconcile book income to taxable income, all right? Now, let's do this. Let's take our taxable income before capital gain transactions, and that is $100,000. Now, in 2012, the company has a capital gain, all right, which is taxable of $20,000. All right, so now we have $120,000. Now, the next thing we have to do is this, all right? We have to determine how much of a net operating loss carry forward we can deduct against this 120 to arrive at taxable income just before the dividend received deduction. Because the net operating loss carry forward is a deduction, right, to arrive at taxable income on a corporate return. But obviously, all right, the net operating loss carry forward was not a deduction to arrive at book income. By the way, capital gain is taxable for taxable income, and capital gain is taxable for book income. So the capital gain that you add to the 100 is not a reconciling item. The reconciling item is the net operating loss carry forward, which is deductible on the tax return, but not on the books. All right. Now, we put down the information here. All right. We have a capital loss of $40,000 in 2011, and we put down the capital gains for 2008, 9 has 0, 10, 8, and 2012, 20. Now, first thing you do is you take your capital loss, which is $40,000 from 2011, and we know that for tax purposes, you can take a net capital loss and carry it back 3 years, and then forward as a net operating loss carry forward. And you always go back first, right? And you go back to the oldest year. So let's see what we did here. We take the $40,000 2011 capital loss, and first we go back to 2008. 2008 had a capital gain of $3,000, so we use $3,000 of the $40,000 capital loss to wipe out the gain. Now, 2009 had no capital gains, so none of the loss is carried back. All right, now we go to the next year, which is the third year, all right, and that's 2010. They have an $8,000 capital gain. We're going to use $8,000 of the capital loss to carry back and get rid of this $8,000 gain. So we used $11,000 of the capital loss, all right, to get rid of the carrybacks. All right, now that leaves $29,000 to carry forward. $29,000 to carry forward. All right, now what we're going to do is this. All right, we have a capital gain of $20,000 on our 2012 return. We started off with taxable income before the capital gain, and now, all right, we add the capital gain. So we have taxable income after the capital gain, but before the net operating loss carry forward. Now remember, whatever net operating loss you have to carry forward, you can only carry it forward up to the capital gain. So if you got a $29,000 capital loss carry forward, and you only have a 2012 $20,000 capital gain, then your net operating loss carry forward cannot exceed the amount of capital gains for 2012. So I can deduct on my Form 1120, all right, the net operating loss carry forward of $20,000, all right, up to the amount of capital gain that was taxed. And that will give me a taxable income of $100,000. Now, what is the reconciling item? The reconciling item is the item that is not in both the taxable income and the books. The capital gain is in the taxable income and the books. It's not a reconciling item. It doesn't appear on Schedule M1. But the net operating loss carry forward is only a deduction on the tax return, but not a books. All right? So, what is our answer? Our answer is this. Our taxable income, after we add in the capital gain and take the net operating loss carry forward, is $100,000. And the reconciling item, which is the Schedule M1 adjustment, is the net operating loss carry forward. So we actually reconciled the taxable income after we added in the capital gains and subtracted the net operating loss carry forward. All right, but remember, if there's a dividend received, all right, you're going to actually reconcile to taxable income before the dividend received deduction. All right, and the explanation to the answer is right there for you. All right, so these are two good questions we went over. They're challenging. All right, go over them again. All right, read the solution, and I think you'll gain some knowledge from doing these two questions because they do test your knowledge. Okay, take care and good luck on the exam.